Let's see what comes out of this. But for now, let's move on. I was addressing Bharti and Indus Tower. Bharti particularly, of course, the immediate news was the 4.7% stake that Bharti is buying in Indus Tower at a discount to market price. But there were a couple of other issues as well. Sonal will give us all the details. Sonal, over to you.
Bharti Airtel is in focus because the company has entered into an agreement to buy 4.7% stake in Indus Towers from Vodafone PLC at 187.88 rupees per share. Now remember, it is around 7.5% discount to Indus's Friday's closing price of 203 rupees per share, and also the 52-week low for Indus Towers stands at 194.25 rupees per share. Now remember, Vodafone PLC on 24th Feb had announced that they will be selling 2.4% stake in Indus Towers at 225 rupees per share. And Bharti will be buying it and will be paying around 2,400 crore rupees for this purchase, and its stake in Indus would stand at 46.4% after this particular acquisition. But this news does not come as a surprise, as it was already factored in. Additionally, the stock is also in focus on the back of the analyst day takeaways, where the company did say on Friday that it is focused on its fast-growing non-mobile business, 5G readiness, capex spend, and new age business as well. Overall, the analysts think that this particular stake in Indus has come in at reasonable levels, and also company sounded very bullish in the analyst day, where they said that they are growing the non-mobile Indian business at a higher pace. Enterprise homes and monetization options in the business is something that could be positive for Bharti Airtel.
Okay, Sonal, thanks a lot for that. Gurmeet, Bharti has been really smart with the Indus deal, but that apart, your thoughts on the stock? It's been one of the stocks which has, even in the bear market, not fallen a lot. What would be your view here?
So it's pretty constructive, and also, if you look at the quality of subscriber base, they have about, let's say, 36 crores subscribers, one of the highest 4G space. Whenever the tariff hike has gone, like last time, the pass-through has been the best for Bharti, both in terms of ARPU and impact on the EBITDA. Second, I think even this Google's deal, although it's a very small stake, and part of their wider commitment on the India Digitization Fund, also augurs well in terms of Bharti's focus area in 5G, in network expansion and cloud. And today we heard management talking about monetizing some of the digital assets, right, which includes payment banks and Nextra. So I think we have to see if there's some more value unlocking as far as digital assets are concerned. And then I think the bigger trigger to me, would be a tariff hike. Also, if you see the Africa business now fairly stabilized, almost 13 crore kind of subscribers in 12, 13 African countries. Sonal made that point that even the broadband business, home broadband, and the enterprise business also seems to be picking up. So I think probably has most of the growth levers in place.
All right. Thanks very much, Gurmeet. Great to have you with us here. Appreciate you joining in and running us through your views at this point. By the way, the market has picked up pace even more. So we've got the Nifty, which is up 50 points. And it's from over the last 5-6 minutes, actually, from levels of 17,160, it's added about 40 odd points in the last 7 or 8 odd minutes or so. Our Alpha Manager of the day is with us. Harish Krishnan is Executive Vice President and Senior Equities Fund Manager at Kotak Asset Management. Harish, great to have you with us here. Thank you very much for your time. Appreciate it. Harish, I know that you look at a lot of the sort of global stuff as well. Any thoughts on, the US yield curve, the 530 inverting, and how much attention really should be paid to it at this stage in the cycle?
Oh, hi, Prashant. I think it is very important to pay attention to the overall yield curve. Clearly the 530 and as you mentioned has inverted. The 210s are not very far as far as inversion is seen over there as well. I think the construct that we can think through is twofold. One is, if you look at obviously in this entire cycle, the recession was very short-lived, thanks to the huge steroid boosters that were given both by central banks and, more importantly, the fiscal measures taken by their governments to give handouts to people, right? Which meant that a lot of growth of the future was kind of pushed in the form of handouts, which has got spent. And therefore, in terms of the longevity of the cycle, it clearly puts a question mark over there. And which is why I think the inversion so early into the cycle is what we are starting to see about. And that has got implications both in terms of the style of portfolio construct. Is it still going to be value outperforming growth, or will quality make its comeback? You also have a potential aspect that you've got commodity prices raging through, inflation raging through, and all central banks are trying to use inflation as the number one villain and target, which means that there could be potentially demand destruction also coming through. And therefore, in that construct, does value really continue to keep outperforming as it has done in the last 18-24 months is also something important to deliberate on. So I wouldn't be totally dismissive of this inversion, but I think the final death knell, so to speak, would be in terms of the percentage of the yield curve which has got inverted. We are still very early in the game. Of course, it's a very flat yield curve, but we are maybe less than 10% of the yield curve which has got inverted. As it shoots up closer to say 25, 30, 40%, and which can happen very fast, as we have seen in the last 1 month or so, that is where I would think that the probability of recession increases quite substantially.
Hi, Arish. Good speaking to you as always. You spoke about value a couple of times in that, in that first take that you gave us. And the new age companies, everyone was so excited about them in 2021, but a lot of them have come off their top, whether it's a Zomato, whether it's, car trade has seen a lot of selling pressure. And even in India Mart, platform company has half from the top. What's your take? Ultimately, some of these businesses will do well. So do you believe that the new age theme is going through a temporary phenomena where in fact you are seeing some selling, but gradually these stories will play out? I ask you this because I see quite a few of these stocks are part of your portfolio. Go ahead.
Right. So I think there was this very interesting report wherein I think it was by Credit Suisse, wherein they had plotted the percentage of unicorns which are privately held as a percentage of listed market cap. And in India, that number was north of 10%, whereas for most of the developed world, including China, US, Europe, etc., that number was close to about 3 to 4%. Why is this number important is I would think that, all these new age businesses are essentially a bet of optionality that can play out into the future. Now, whether it should be 10% of the overall portfolio of a foreign investor, whether it should be 3-4%, or whether it should be lower is a matter of contention. However, we do think that quite a few of them, especially some of the names that you did speak about, are in quite pole position to change consumer habits. Yes, they are loss-making. Clearly, there is a pressure on loss-making companies today with elevated yield curves. There is also a function that whether capital will be available to them, which was so abundant in the last 18-24 months, whether that will continue to be abundant for loss-making companies is a question mark. So I would say that we continue to have a promising outlook towards quite a few of these, but we treat them as option values. So what does that mean? We don't have them as 10% of our portfolio or 5% of our portfolio. The basket of all of these companies would be anywhere between say 2 to 4% of our portfolios. And that is what we think that over a period of time, as we have greater comfort on their execution, as the cycle eases out, and of course, we've seen a significant drawdown in a lot of these names, as you rightly mentioned, we would be wanting to scale that up. So we continue to keep our faith in the overall new age businesses.
Okay, the market's at high point of the day. Reliance has been helping the bulls, and that also has moved to high point of the day. In fact, Reliance has now moved within 4% of a 52-week high. That's been the strength of the stock for last many days. In fact, that's been batting for the bulls. Harish, hi, good afternoon. Quite a bit of auto and ancillary holdings in your portfolio. What we're getting to know is that this is turning out to be a really tough year for auto companies because there's demand weakness, inflation going up, and commodity prices are really hurting margins, and they do not have any room to sort of pass on the hikes because, as I said, demand perhaps is not as strong. So you reckon this, for example, your Maruti, M&M, I know you won't talk individual stocks, but what would be your approach here incrementally?
Sure. So Anuj, we remain constructive on the overall space. And I think, as you rightly said, the last 4-5 years have been extremely difficult, starting from the BS4 to BS6 transition, GST, insurance hikes, you've got the commodity price hikes, and now you've got the semiconductor chips situation persisting. So it's been a perfect storm wherein earnings have got cut significantly. You've got demand which has got impacted due to these price increases. And this is not only an India story, right? Even globally, if you were to look at it, auto sector and auto stocks have had a difficult 4-5 years going for them. I was just looking at a stat, the total inventory in US of cars that is available for selling is 31,000 cars. And just to give you a context, typically in a normal year, pre-COVID, US used to retail about 17 million cars. So that goes to show the amount of drawdown that has happened in terms of inventory due to all of these. Now, of course, it can continue to keep declining and go to zero, but presumably it'll stop there. The point I'm trying to make, Anuj, is that yes, whatever has happened is unfortunate, and a lot of this is already in the price. Incrementally, are things starting to move ahead? Clearly, the developments happening out of Ukraine were a surprise, and therefore it has pushed out recovery in terms of availability of semiconductor chipsets as well as the commodity prices going up. But I would think that if you've taken a 5-year kind of a slowdown, and it's already baked into the price. NSE Auto has given a total return of 2% CAGR over the last 5 years, compared to 15-16% that the broader markets have given. I would think that if you have a horizon of 3 to 5 years, a lot of these are in the pole position to drive, and execute on the great Indian opportunity that will be there for auto as a sector as a whole.
Yeah, if there is one part of the world as a geography which is most likely to first start to decelerate significantly, it's Europe. And at the end markets there is, et cetera, as well. So auto anchors which are heavily dependent on those end markets, I mean, will find it very tough for some time, right? So does it make to think about this issue like that, or you think that's unhelpful?
Well, you're right, Prashant. There are a lot of moving parts, right? I guess what we are essentially talking about is the rate of change. And the rate of change, to my mind, is that there is going to be a whole host of model launches in terms of global auto launches. You're going to see a whole host of EV launches across the stable, which are going to excite demand. Yes, there is a definite geographic issue in Europe, which is the epicenter of the entire crisis, and there will be an impact on demand. But I would think that when we say that demand has cratered, sure, can that be a surprise? Can it last under 6 months? These are all imponderables that we need to think about. But if one takes a 3-year view, I would be very surprised if these trends continue to be as lackluster as they've been in the last 18-24 months.
Good speaking to you, Harish. Thanks so much for stopping by and filling us in with your views. Look forward to chatting with you rather soon. By the way, we're talking about the headline